Okay, I
It's
think we could start. I want to start with a little pop quiz. This TPO chart I find quite amusing, given what's happening this week and where we're trading. So I'm going to open it to the floor. Um, what, if anything, stands out to you about what you're seeing here and where we're trading, the sort of area we're trading around 50 right now? Interested to hear comments.
Hmm. Well, it's where we previously exploded to the upside, obviously on one of the
Yes.
PIs.
Yes, that's kind of on the right lines.
It certainly is where we left the prior range last time. We've come back into
Yeah.
it.
And thinking about this and where we left Bauer is on it. Yeah. So this double distribution day here was FOMC on the 1st of February. We're
It's not a
back
PI.
to the scene of the crime. And tomorrow is FOMC minutes.
Oh, that is tomorrow. That's right. It's Tuesday.
So on the
and GDP this week also.
Yeah. So as Jeff has spoken about, the market gets news, we get the reaction, then we get the reaction to reaction. And then depending upon what it was, like CPI, which was here, we get the reaction to reaction to reaction. The market over the past, 2 trading weeks has digested all this stuff from FOMC and gone back to where we were. But then the minutes
it doesn't
come
care.
out. So it's as if, okay, just looks at all that and meh. So the reaction on the minutes is going to be really interesting because one of two things is going to happen. We're either going to say, you know what, I liked it back up here, or we liked it back down here in the previous range. But this is so standout for me that, effectively to the day, it's the anniversary of, let's see what they said. When this happens, tomorrow, let's actually look at the minutes in depth. We are right back to before that information came about, which I find amusing / interesting. So for today, especially post-holiday, I'm expecting a whole heap of not much up until FOMC minutes. And the clue kind of comes from, well, look where we are. Yeah, we're back to the last bit of big information that we had, and we've discarded all that until we get the next information. So why should we expect anything especially dramatic in the next, what's it going to be? 36 trading hours until the minutes come out tomorrow. So let's just be mindful of that. With that in mind, there are other releases this week. So why don't we look through the calendar and then we'll take a look in a little bit more detail at what overnight is like. So on the calendar, first of all, it's Tuesday. I'm all over the place now in terms of where are we, what day is it? Who is this? What are you doing in my garden? So this can sometimes take you by surprise. The PMI preliminary on the S&P thing. So just be mindful of this during what's that? That's going to be a period. I'm on UK time on this calendar. So be mindful through the open today, opening 15 minutes. Tomorrow, the big thing, of course, for US markets is going to be FOMC minutes. So we will, we'll make initial balance. We'll likely break it. Shouldn't be that dramatic. Then after a break, it's going to leave us with some levels of not too high, not too low, but we're not going to resolve anything until the minutes come out. And then we'll go crazy. And the close is going to be interesting. Then the next day, we probably give it all back. But don't get caught out by the figures today or tomorrow. Need to be on top of the calendar, mentioning no names, JVC, this week for sure. So in the next 2 days. We have got GDP on Thursday, pre-market. So that's going to create a reaction. Then what's going on Friday? Nothing. Okay, still more inflation-related stuff. I think Friday, great, we got talking heads. We got 2 Fed speakers in the second half of B period. I think post initial balance on Friday could be the best trading of the week because we've got all the information out of the way. The talking heads will be dealt with. I'm not expecting any significant artifacts, not high enough, not low enough, that we put in the next few days to really resolve until the tail end of the week. So I'm going to be a bit cautious, spidey sense, as Amy would say. I'm not going to hold out for too much on anything I'm doing this week. In terms of overnight, so what's the absorption you were talking about here at 50, Jeff, wasn't it? Which we're above this negative 3,000.
Yep.
Yeah. Also, look on the pullback off the session low, 333 lots at 70. And how bizarre is that? One tick above it, it's negative 332 delta. Related? Coincidence? Don't know. So below us, we don't have a price rejector. That was probably stopped. So in 2 there, that's 33. So we haven't really gone low enough, but we've got a barrier at 50 to get through. The high overnight, let's put in a price rejector. Interesting for the, if we compare to the holiday session, we've gone lower than the half-day session yesterday. And also, there's the Sunday overnight into Monday, and there's the truncated day session. We've got this little baby single print at 74.75, which is up here, asking to be resolved. Probably won't, but that's just below the open. So we can think about gap fills and that kind of thing. So the open has potential to be interesting, but I can't see that we can go too much lower because of where we're trading. Around the point is about 48.5, which is where this whole new range started. So if I look at the ATR projection as well on the day, the ATR low is down here at 26.5. Do I think it's likely we're going to go trade down to what? Beyond 3 VWAP standard deviations to about the 25 level today? Can't really see that. What's going to take us there? On the way up, where is the ATR projection above us? Okay, it's near the big fat round number. That's interesting. So, that's giving me a kind of rough idea. I'm kind of thinking of scenarios of which way may we go. Okay, look at this. We got a poor high as well a few sessions ago. Poor high sitting there up at 90.5. So without my big picture, the scenario, without putting a big bias on it, is I think we're more likely to end up going up than down. But I am extremely cautious for today, tomorrow, until we get the figure out of the way. We can just go back and forward until tomorrow lunchtime, US time. That's kind of my view on where we are. Jeff, anything from your side?
Oh, hang on, I had to unmute myself. Nothing to really add to that. No hedge fund call yesterday or today. We take the week off, and I'm not feeling 100%, but it's interesting. I've been up trading and coaching since about 2:00, and eyes on this 50. It was a really interesting spot. I just, the only thing I would add to what you said is I would love to see a ledge break to the downside of 50. Take out that 47.75. I would be getting long very aggressively if there was any excess down there.
Totally. I think inside out to the downside is going to be it'll be an okay trade, but it's not going to give us much if we're starting from around here. Once that happens, I would not be chasing it. I'd be looking for signs of we have probably gone far enough, and now let's go back outside in. And this is coming from someone that doesn't really like trading outside in.
Exactly.
So much more opportunity to the upside, especially if we break the low.
Yeah, would you not want to continue scalping towards the we're not done yet?
Not right now.
Well, not this moment, but I mean, after we're open and, A period.
I'll see what the market shows me, JVC.
No, of course, that's what I'm saying, is if it's showing, no, we're not done yet, it's sounding like you're saying you'd rather just sit tight and wait for the long instead of going with.
Oh, it depends on the nature of the move to the downside. I think, an inside out trade is going to be fine, but it's not going to go down to 4,000. I can't see that. So, of course, exiting at the edge, is fine. But then I'm really interested to see if we've gone far enough, I'm very interested in asymmetrical long trade from the low.
Got it.
Yeah. I think that's the right scenario. And ideally, you know, from a scalping point of view, what I'd like to see is I'd like to see that ledge break really sharply down and, you know, and then get absorbed. That I would jump into that. So
like this guy at 43.5 with his 100 lot order.
Yeah. In fact, we were talking about that earlier. There was, let's see, there was a big block. They're not there anymore. There was a big block of buyers. Yeah, around 47. There was a big MBO there. And so, yeah, I think a push down, particularly if it's thin, you know, it will be a really good potential long. But one thing that's making me a little wary of that is NQ's ledge is a whole lot further down. You know, we're nicely correlated. Everybody's about 1% down, but NQ, you know, there was some earnings this morning. Walmart came out and Home Depot came out, and they actually guided higher. So that's a little bit of the bid under the market. But
actually, that's a good point. If we look at all the other markets around the initial FOMC date and where the move started, you know, where are they relative? RTY is, you know, dipped below it previously, but fine, elastic band, and is back in about the same place. NQ on the first, where is NQ? Okay, so it would be here, I guess. Yeah, NQ has further to go to the downside.
Yeah, exactly. That's going to be the interesting thing. If this, you know, if we break 50 to the downside in ES, I always run ratios of, you know, at the moment it changes, but right now it's about 4-to-1 ES to NQ. So where would that put NQ? And the answer is not low enough yet. So,
yeah.
So NQ could definitely
really
extend
uncorrelated until that resolves. Yeah,
exactly. Yeah, we've seen that. We saw that all last week. Tech kept getting beat up, you know, and the only thing that was up Friday was Tesla, you know, and everything else was in tech was really beat up. Yeah, I'm looking at the NASDAQ 100 right now. The only significant upside was Tesla, and everything else: Microsoft, Nvidia, Apple, Google, Amazon, Adobe, all down. So yeah, tech continues to be under pressure. So that'll be interesting. We could have a nice lack of correlation to play there.
It is, you know, as ever on a Monday, but certainly post-holiday, pre-news, blah, blah, it is a morning at least to just sit back and assess what's going on. You know, you have your scenarios, but you don't dive in. Allow the market to show its hands this morning.
Yeah, I think that's a good plan. It's I was also just thinking, as you were saying that, you know, what kind of shocks to the system could we get? That number at 15 minutes after the open, the S&P global number, the global PMI number, that last month, that actually created a lot of volatility, if you remember, for about 15 more minutes. And then top of the hour, we've got home sales. So yeah, this could be an interesting open. It really could.
I think Friday-ish is going to be the best trading. I'm going to be super cautious to take what's there. Point of view question from Pete. No, these, what color would you call this? Midnight blue on the right. These are quant add-ons. I'm using quant at the moment for copying across a whole bunch of accounts, and half my screen now is about execution on multiple accounts and managing risk and monitoring it, hence 3R traders, blah, blah, blah.
Okay.
But you know, all I need to trade ES is on the left-hand side anyway. You know, session, pullback for pullback, bit of context on the left.
Ooh, as we're talking, we just took that 50 out.
Yeah.
And it's kind of getting bought now, pushing down. Oh, this is a very interesting spot right here for a scalp.
Yeah, I can imagine a little spike down, then we go back into the range. Yeah.
Yeah, I'd love to buy a spike down, but we're not quite getting it. It's getting absorbed here. Then we just swept up Vortex. So this is something else I was seeing last night. We're really thin. I mean, the inside bid and ask is 20 right now. And it goes, we don't even get to 100 lot to the upside till 60. And the downside, well, actually 48 and 47 right now have hundreds on them, 150. So yeah, it's thin. It's thin.
So interesting morning ahead, and be very cautious. In terms of the TRG week, it's Tuesday, bizarrely. So I'll be doing a fishing trip starting at at some point in the future. When am I
You
doing
want
the
to
fishing trip?
disseminate links here.
Yeah, we need to push links out because the site's still reloading DNS.
Yeah, in fact, let's do that. Let me go into Zoom and I'll find the links. Zoom, that's their web address, isn't it?
Something like that, yeah.
Yeah, so we sign in. Here we go. Oh yeah, for everyone, the site should be back in around, conservatively, within 3 hours, including the pit. The pit is on the same infrastructure, so we had a little cock up on some web infrastructure, but the internet should have sorted itself out by about 9 a.m. Pacific. Okay, fishing trip is at 10:30 Eastern, so we'll be doing an hour looking at post initial balance. I'm just going to get you to all the registration link here.
Are you going to email that to everybody again? Probably should.
Could do, couldn't we? Could email it to members. Why don't we do that?
Yeah.
Yeah, I think we need to, because a lot of people, if they're not here, where are they going to see it? So
yeah. So I'll email out the links for the fishing trip and then JVC session exploiting your TRG experience shortly. So anyone who's a member is going to receive that now. Well,
sure am glad I got my notes out of the pit and into a Google Doc.
Yeah. So I think that's it from my side. I will do an email out as well once the pit's back up, just so people know.
Great.
cool.
All right. So watch your email, everybody. Links incoming, and we'll see you at sessions this morning. On that note, in fact, for my session, I actually managed to perfectly cover everything I wanted to about the basics of utilizing the TRG resources in the first 2 sessions. I have a few ideas for what I'm going to talk about today, but any questions at all, operational type stuff about using TRG, website, library, your own path that you're on, figuring out what to do next, anything like that, bring that stuff and we'll just kind of have an open conversation about such things.
Cool.
Great. All right, gang. We'll see you all later. Have a good open.
See you in a bit. Bye for now.